The S&P 500 closing at another record high on Tuesday as investors continue to bet on rate cut optimism. But geopolitics could pose a risk to that narrative. That's according to a Bank of America's latest global fund manager survey. Yahoo Finance's Josh Schafer joins us now with some of the key takeaways from this report. Let's start there, just in terms of the biggest tail risk and some of the shifts that we're seeing.
Yeah, sometimes I think when I see geopolitical risks listed as the top risk, you could almost view it as a contrarian. Okay, maybe there aren't a lot of risks that are actually immediate to the market that are coming up at the top of investors' minds, right? So when you look at the actual chart here, I think the bigger takeaway is probably that you see higher inflation coming down. So yellow is May, what respondents said May, light blue is June, and then purple is July. You can see inflation slowly receding there. And then at some point, respondents have to pick something, right? They're not going to pick no risk. And so I think maybe the broader takeaway here, when you consider also what the rest of the survey tells us, and I know we're going to get into soft landing in a second here, but if investors are seeing high inflation as not as big of a risk, I think a lot of people would argue for markets as far as what could immediately impact markets. That's probably the biggest takeaway. Geopolitics are always an issue. And perhaps the bigger issue within geopolitics is it's something that we're not thinking about. So it's something that maybe we shouldn't spend too much time on. But inflation is a big one, and I think that was one of the bigger takeaways here is investors are feeling better about a soft landing. That chart that we've been following for months now, we saw no landing come up at one point. Hard landing has come into favor a little bit more at times. But investors feeling the best they've felt about a soft landing since the start of 2024 feels like kind of the market moment right now with the action we've seen recently.
Yeah, it's interesting. We just had a guest on essentially teasing this idea that even if we had a Chinese invasion of Taiwan, that could be good for some chip stocks. So, I mean, the geopolitical question mark in the room is certainly a tough one for investors to parse. But I want to zero in on the soft landing point that you just made. It just feels like you can't be that mad at the Fed about anything if they are able to engineer this soft landing. And taking a look at that first chart that we had from you about investor sentiment surrounding higher inflation, the degree to which those concerns have fallen off from the initial report from May. If I'm Jay Powell, I'm looking at that and feeling pretty good.
And the kicker here is the survey was done from July 5th to July 11th. So the last day someone could have responded was the day of the good June CPI prints. It's probably fair to assume a lot of the responses here didn't even include that good print, right? That sort of sent markets soaring over the last couple of days. But this trade is clearly, it's the Russell 2000 trade we've been talking about a lot over the last couple of days, right? Small caps outperforming the S&P 500 by their biggest amount we've ever seen in 5 days. Like the soft landing trade is the trade right now. So it certainly adds up that that's how investors are feeling. It'll be interesting to see in a month from now when we get the August print. Does that number go up even more, or are people going to be sort of wishy-washy on the different little data points we get between now and then? I'm curious if we can stay this euphoric, Maddie, for this long.